Broadcast is now starting. All attendees are in listen-only mode.
Okay, can everybody hear and see me? I'm having a little problem with my sound, so I just want to make sure everybody can hear and see me. Let me see. You guys can hear? Can you guys hear me well? Hear you fine. Okay, and it's probably just sound on my end. I don't know. We'll have to see. Okay, let's move on. Okay, I'm going to start from Happy New Year, guys. I'm going to start from the beginning, and we'll work our way down again, like we always do. So let's start with our monthly chart. What is our monthly chart telling us? Well, our monthly chart was always giving us a warning that we are looking for a fourth. What do you mean you cannot see? Can you guys see? Yes. Okay, then there's something on your end. If you guys don't have a screen, then there's something on your end. I have a few people that say no video, which means it's something on your end, guys, not mine, because everybody else says they can see and hear. Okay, so where we are right now is effectively we're in a fourth wave. The market told us to be looking for topping in a third wave, and right now we are in a fourth wave. So the machinations that we'll see during a fourth wave will be extensive, and the rule of thumb is to just expect whipsaw. So now let's move into the whipsaw we've been looking at on the daily chart. Now, on our daily chart, I had a target for the A wave. We have struck that target for the A wave on the daily chart. However, the manner in, oops, hold on a second. For some reason, this doesn't look like it updated. However, the manner in which we struck that target looks to be missing a fifth wave in the C wave down. And I'll show you that on the 60-minute chart. So let's move down a little further. I'll come back to this chart in a minute. What we seem to have is a 1, 2, 3, 4. We seem to be missing a fifth wave down for this C wave. Now, more importantly, we seem to be missing any type of divergence at the bottom of that structure. And the great majority of the time, as I've written, we see that type of divergence at the bottoming of a C wave, not necessarily of the bottoming of A wave. The bottoming of a larger degree A wave is going to be quite deep. You're normally going to, why? Because the C wave gives you divergence relative to the A wave. That is most often what you see in the bigger structures. So when I go back on my daily chart, hold on a second. Oh, crap. Hold on. There we go. Let me get this down. When I go back to my daily chart, my expectation is going to be that once this A wave does form as completed, we're going to get a larger degree B wave. How high that B wave is going to take us, I cannot say yet. I really don't know yet. Minimally, I said it's going to be 2,800. Minimally. It can even make a higher high and hit the target we didn't strike on this third wave, which was 3,011. That's still a possibility, and I ballparked that as we stand today, and we've always stood, I ballparked it at about a 25 or 30% chance right now. I'm not going to know that any better until that C wave begins and gives us a 1-2 structure off for that C wave. So until we actually get that developed, I really am not going to have a good idea of where we're going to top. But once we get a 5-wave structure completed for that C wave, that's where we're going to top. Minimally, my expectation has been 2,800 right now. I still would like to see that lower low, but take a look. Once this A wave completes, you're going to see this start rising as the B wave rises. And it's going to take us right back up. And I had a target back up in here. And I think it's going to take us up into this region here before the MACD tops out and we get a C wave down. During this C wave down, the selling is not going to be as strong as this. So when we start bottoming in this C wave, you're going to see a divergence between, on the MACD, between this A wave and where we bottom in the C wave. I'm not sure how long it's going to take us. I'm not sure how far out it's going to be. My expectation is if this is the structure we're playing out, it's probably not going to happen until at least the last quarter of this year, potentially even into early 2020. So that's my overall expectation. Timing-wise, we're really not dealing with anything that we can really sink our teeth into. It's just a general expectation. So if we continue up in this B wave, I think it should take us at least into the middle of the year. Okay? That's just general expectations. Nothing I can really sink my teeth into from a timing standpoint. Okay? For here, what I'm looking for here is I'm looking for this to be the bottom of the A wave. I'm looking for a bigger B wave to take us back into here, and then a C wave that's going to give us divergence. Lower price, higher MACD, or equal MACD. That's what I'll be looking for when we're bottoming in the C wave of 4. Okay? Let's move into the smaller degree structure on the 5-minute. On the 5-minute, I gotta tell you, cash and ES, again, are telling kind of different stories. They really are. Cash does not look like 5 waves up. So I'm having some difficulty in being able to identify the micro structure. And this is not unusual when you're trying to figure out the bottoming in a bigger degree count. Ideally, I really want that 5th lower to give me the positive divergences that I would normally get in a C wave relative to the A wave. So I really would like, especially relative to the 3rd wave, I really would like to see lower. Our ideal target for that low is still 25.20 down to 23.03. I'm not seeing anything on the microstructure, though, that is telling me we've begun an impulsive wave down. A 5th wave in a C wave should be a 5-wave structure. That is not what we're getting right now. That is not at all what we're getting right now. Right now, what we're seeing is this has been quite corrective. And it's starting to look like that either this was all of the B wave or this is an A wave. This is a B wave. We're going to get a C wave down to the 2400 region, but that's only going to be an A, B, and then set us up for a C wave higher. So right now, I mean, the same thing is applying on the ES. That is your support on the ES. If you're looking to buy a pullback for a long, 5 waves down into 2441 or directly down to 2396, that could be an indication that, yeah, this is only going to be a B wave pullback. And if you choose to buy that, you set your stops below 2396, and if should we break down there, then you're going to get another buying opportunity lower for the 5th wave. Okay, that's, you may have, if you're trying to buy a B wave pullback, that may be the only way to do it, where you have 2 attempts. Unfortunately, that's what this is going to be like in a 4th wave. Unless there is a clean structure, this is what happens during a 4th wave, assuming you're looking to trade it. So that's just the general perspective I have about where we stand. This is not looking. You lost me. Lost me in what way? In what I'm saying? Guys, I'm not sure how many times I'm going to be able to repeat this, but I'm going to continue to repeat this. 4th waves are going to be difficult. 4th waves are going to be choppy. And unless we have a solid structure to work with, the risk of trading within a 4th wave is extreme. When we did not get a full 5 waves down, rather, we really only look like we got 3 waves down. And the market is now pushing up against the top of my pivot. It makes me question whether we're really going to get a 5th wave down. In order for me to be strong in my expectation for a fifth wave down, I noted over the weekend, I need to see the market develop as an impulsive structure to the downside. This is not an impulsive structure to the downside. Do you guys hear me? This is not an impulsive structure to the downside. Is that clear? So when I don't get an impulsive structure to the downside, it makes me concerned that we may already be starting the C wave of A. Can we get a lower low for that? Sure. But as you can see, it's not giving us a lot of strong indications about exactly where we are in the count. We're probably going to need a little more indication. Now, for those that want to sit on the sideline, remember what this is going to look like in a likely scenario. In a likely scenario, even if we do get a direct breakout for the C wave of A, as it develops, we'll be able to identify a little bit more of the structure as we rally in a C wave of A. If the B wave is already done and we're going to rally out of here, as it develops, we'll be able to nail the structure down, but it doesn't really help except for some day trades within this rally. But if you look at it from a bigger perspective, even if we do rally out of here in the A wave, you're still likely going to see, you're not going to get through this downtrend channel on your first try. This downtrend channel has been nicely built. You're not going to get through it on your first try. You're likely going to see a B wave pullback before we get the C wave higher. So we're probably going to be coming right back down to where we are today from a much higher region, and then we can develop a C wave that's going to take us to at least 2,800. This is normally the way these play out. So if you're going to get FOMO, fear of missing out, if we do get a direct breakout, I'm not saying we're going to, but if we do get a direct breakout, then we'll have day trading opportunities in that C wave of A. But more importantly, I think you're going to get a bigger B wave pullback that you could then buy for the bigger C wave rally. And I don't think we're going to get through this declining trend line just yet. Okay, guys? So does that give you a clear indication of the overall lay of the land when dealing with the S&P? And I'm going to try one more time and take you through this. Ideally, I'd like to see a lower low, but I don't have a structure that is giving me any good indication that a lower low is going to take shape. Rather, it is starting to look more like the A wave, the bigger A wave bottom is already in place and that a lower low may not occur. That's what it's starting to look like. In order to get me into that, you got to break down below this support of 23.90. Until then, this looks like it's looking more like it's taking shape as a B wave pullback. And if you're going to attempt a long on any pullbacks, you may have to look at it from being stopped out. In other words, you're going to if you try it, you're going to take your shot here. If we get 5 waves down into here, you'll take your shot here. And depending on how it develops, we'll be able to set stops. And if it turns up in a 5-wave structure, it's clearly going to be the C wave rally. If it turns up in a corrective structure, you're going to have to tighten those stops and then look for that. So again, one step at a time where we are right now. And if we miss the start of the next rally, don't get too much FOMO because you're going to see the bigger B wave pullback still. Okay? Are you planning long attempts for the C of A? The answer is yes. I really personally would, I've got some in IWM, but not big positions. I'd like to be adding to those positions for a bigger rally. I really would. But IWM is no different. Exact same perspective, guys. No different on the IWM. The IWM is the exact same perspective. I would prefer a lower low before we begin this rally. Doesn't mean we're going to get it. But it's in the exact same position. If the IWM takes out 136.20, guys, that's going to put you in the A wave back up into here. And then you're going to get a B wave, and then you're going to get a C wave. No different. Exact same situation. There's nothing different between the two. Let's move into metals. I'm going to take you back to that bigger GDX chart. Oh, that's not the one. That is probably the one. And when I look at the GDX, I'm still in the same perspective that I have been all this time. I've got nothing different on the GDX than I have before. To me, the GDX presents as an ABC structure higher. Ideally, I'd like to see another higher high. I'd like to see us at least, we came 3 cents shy of 21.50 on the first attempt. I'd like to see us at least hit that 21.50 on the next attempt because, to be honest, this fourth wave could just be a triangle in here. And then I just need a higher high. And should we get that higher high, guys, that's going to point me back down to the 16 region for the fifth wave in this diagonal. That's why it's so complex, because in the IWM, in the GDX, this is a diagonal. That's why it's so complex. I'd like to see us getting higher. As you can see, that's where my fifth wave is. This could easily be a triangle. A, B, maybe that's C. Maybe C has to go lower. I don't know. This is enough for me to consider even the triangle complete, to be honest with you. You got the minimum number of waves in here for the triangle to be complete, and we could already be started on the next rally into the target zone. Doesn't look terribly complete, but it wouldn't shock me. On the cash, it looks good enough to complete. So for now, again, I'd like to see us hitting at least 21.50. Through 22.30, folks, I have to reconsider my perspective. But to me, there really isn't much looking like it's going to be taking us higher. When I look at silver, I mean, like I said, silver, I needed to see at least one more push higher. Take a look at the divergences here. And when you see that I have a fifth wave right basically in the same region, if we get a 4-5 here, I really have a 4-5 set up on silver that is pretty much at the same height of the prior third wave. Don't be surprised. Silver, if you go through silver's history and if you have experience with silver, you would understand silver quite often sees double tops. Quite often. It happens more so than probably any other chart I've ever tracked. Silver will quite often give you a double top. It's not unusual. So for me to maintain a 4-5 still to look for that, I have no problem with that. And for me to expect, and I've mentioned this before, for us to get a wave 4 down when we get an A wave down in the rest of the market would not be unusual. And then to see silver get a higher high for its fifth wave when everything else is getting a B wave up, and then having an ABC down for silver for a wave 2 while everything else gets its C wave down, that's not unusual. That doesn't bother me about this chart if you're questioning it. So ultimately, I really would love to see a 4-5 play out in silver to give me a much better wave 1 off the lows. That's still my what I'm trying to track in silver. It would be my preference. GLD, let me get into here on my GLD. You know, like I said, if we take out the bottom of this wave 1, the likelihood that this is a wave 4 becomes much lower. Much, much lower. Rather, it starts increasing the potential that this is a wave 1-2 structure. I got to tell you, I don't like it. From a microstructure, this would not make sense. It does not fit well. But, you know, when I see the MACD on the daily pushing up, when I see us pushing at the bottom of this, I have to, you know, and we've had the same pattern on the chart the whole time. We've had the same pattern the whole time. And if we keep pushing higher, that bigger 1-2 will make a lot more sense. This, as I said, And I've said this many, many times. This is not a chart that I personally would be shorting to hedge my overall portfolio. And I feel the exact same thing. What is the chart that I like? I like GDX to be hedging my overall portfolio, and I like the NEM. I still like the NEM. That to me really looks like an ending diagonal fourth wave here. C wave and a fourth wave. I mean, really. Can we still get overlap into right here, which is still a little higher? Can we get one more push higher up to here? Yes. Yes. Preferably, you can even get that overlap, and that's what, I mean, I would love to even see that overlap. That would be nicer to get a little bit of overlap here before we go down. But to me, the NEM really is more suggestive of that fifth wave lower low than than a lot of the other charts. And the NEM is a big part of the GDX. I'm not going to go through ABX because ABX changed charts today. I don't have anything labeled on gold, GOLD, which is its new handle. So I'm not even touching that right now until I have time to be able to go into that. Okay, are we all clear about my general perspective of the complex? It's still bifurcated. And there's certain charts that, yes, you can look for hedges on your longer term positions, and certain charts you should not. And I think I've been rather clear about that perspective for months now. Okay? I want to make sure that's clear. Let's move over to the USO. Let me pull up the USO here. Where is one? Hold on a second. It's not listed here. So let's go into here. USO 144. There it is. Now, that looks nice. That does look nice. The question is that 5 waves up now? Where this is a fourth? We have 1, 2, 3, 4, 5. Or is this an ABC? Is this the A, this is a B, and this is a 1, 2 of a C wave in the A wave, which would be pointing us even higher? Can't tell. But the fact that we took out this high really does bode well for this A wave being in place. That does bode well. So my expectation is, I'd like to see us getting up to at least that 1050, but potentially much higher. And my ideal target for this A wave is going to be anywhere from 1155 to 1245. So I'm still looking for much higher once we have that bottom. And I think now that we took out this high, it makes it more likely we have that bottom in place. I think the probabilities have now shifted over to that A wave finally being over. And once you get over at that 1050, I think you're in a lot better shape. And then I'm looking for at least 1150. At least 1150 for this A wave, potentially as high as that 1245 region. Okay? And lastly, let's take a quick peek at the Dixie. I'm going to show you something on the smaller degree first. And we kept talking about the Dixie over and over and over about how we could still come down and test that 95.50 region one more time before we take off. I mean, it's pretty much what the market seems to be doing. Can it come down and push into it one more time again? It certainly can. But on the bigger perspective, as long as this 95.30 to 95.50 region holds a support, I'm still looking for at least one more higher high. At least. Could be 2. It could be 2. So I'm still looking for that 99 region. So there's really nothing that is telling me that this has topped. Okay. We're now running pretty long on this one. Are there any questions about what I reviewed? I'm not going into stuff that I don't normally review. Any questions about what I have reviewed? Wow, we're turning up already. And guys, there is no 5-wave structure down. That was only 3 waves down there. And it's starting to look as a 5-wave structure off the overnight lows. So I'm not so sure how much bearish we can be, how much more bearish we can be at the moment right now. This is not looking terribly bearish from the micro structures, folks. The microstructures are not looking bearish. You get a higher high here, folks, that could very well be your 1-2. And that would give you a little inverted heads and shoulders here for this 2 here. And then boom. So I'm going to be taking this very carefully. I don't have anything that is telling me yet. I have no impulsive structures to the downside right now. And when I don't have an impulsive structure to the downside, it's making me very cautious about looking down. Most I can look down for right now is probably that 24, the 2440 region, down to maybe 2390, maybe. But I'm not seeing anything here yet that's telling me I can look at that yet. Okay? Could you get a higher move for a fourth? It's possible, but the more this. Let me show you this. Wait a second. Here we go. Where is the 382? I don't think I had it on here. Yeah. No, I don't have it on here. Technically, you can get up into this 2580 region and still be in the fourth as long as you don't get overlap. So technically, the fourth can even come up higher, which means this is a little fourth wave in the C wave. So technically, I'm still going to be looking at this as a possible fourth, but I got to tell you guys, if we're going to continue higher, that's going to be much harder to maintain. And as I said in the weekend, if we get through 2520 in an impulsive fashion, guys, I'm going to be at 50-50 as to whether or not we're going to get that lower low or not. And it's not something I'm going to want to trade at 50-50. So keep your minds on the bigger picture. The bigger picture is we are, quote unquote, bottoming in a bigger A wave. Do we have the bottom in place? I don't know. The market is starting to signal as though it may have. So what is our bigger perspective? Our bigger perspective is you're looking for at least 300 points higher here. Our downside is about 200 points of potential, and our upside is at least 300. At least, because there's good potential we could get higher than 2,800. Okay? I think there's going to be a lot of chasing once we start in that C wave higher. Any questions? Okay. Well, we'll attempt to feel it out here a little more, but why is the past conjunction at 2550 from not a consideration? Again, I said this, Bob, it gets a little too high for this to be a fourth wave. Is it technically possible because we didn't get into the bottom of wave one? Certainly it's technically possible, but you got to go with probabilities, and fourth waves don't often pull back that deeply. Normally, you look at the 382. We're past the 382. We're at a point now where the market really should have turned down from here in impulsive fashion. From the greater probabilities, what we see the greater majority of the time. Can we see something where it's on the lower side of what we normally see? Sure. Could this be within the 20% of the time that we go beyond the 382 retrace for a fourth wave and get a fifth wave lower? Sure, it's possible. It's absolutely possible. But once you're past the 0.382 and you then move past the 764 extension down, and that's what I'm looking at on the 5-minute. That's what I've had. That's my 5-minute, guys. My market pivot was between the 1.0 extension and the 0.764. Normally, a fourth wave will only take you back from the 618, which is what we hit, back to the 1.0. That was this. That's why this was a great hold on, give me 1 second, guys. Doug, can you please tell me what is your handle in the room? This was a great fourth wave here. Great fourth wave target. We stopped there on the penny and we turned down. Not impulsively. And when we took this out, that's where I warned you guys, don't look at the short side. This could just push out for a bigger ABC, and that's exactly what it did. So now the question is, we've now moved back to the 764 extension down. And that really is as far as we normally will see a fourth wave go. To expect it to go higher and still get a fifth wave, very rare. Even coming up to the 764 extension down is rare for a fourth wave. Normally you stop at the 382, which is the 1.0. This is traditionally where the fourth wave stops. The fact that I'm even allowing it this high, that's unusual. But we have an ABC up. And if the market chooses one more push higher, guys, you've now taken it to less than 20% of the time as to whether this will be a fourth wave. Okay? So he's not answering. Okay. So it's no longer... I'm still trying to track that, guys. I'm still trying to track what this is. And it is entirely possible because we've now spent enough time. This A wave started down here and took 1, 2, 3 days. We've now had about a day and a half, about 50% of the time, in a consolidation, a high-level consolidation. And that's enough for a B wave. You get a little micro higher high here, guys. That's enough for 5 waves up. You get a wave 2 pullback after that, and then you take out this high, we're going higher. I think we're going up in the bigger A wave sooner than later. Okay? Okay, guys, I think we've lasted, oh my God, we've been on for over half an hour. I will catch you later, guys. Have a great day.